Hello students, in the previous video we have already discussed about what is forensic accounting, what is importance of forensic accounting. In today's video we will discuss the methods and techniques that are used in forensic accounting. So the first method is critical point auditing. Under this method what happens is the auditor or an forensic accountant tries to verify all the regular transactions of the organization to see where actual fraud has happened. So this can be done by checking the trend analysis of the company. What is the trend of the company in terms of sales, in terms of profit, or they can also check the usual debits and credits that are happening in all accounts, especially in case of cash or bank account, where the money is coming and where the money is going, to whose account the money is being transferred. All such transactions can be verified to see where the fraud or scam is happening. Then if there are any discrepancies in the receivables, payables, or if there is mismatch in the inventory, whether too much inventory is shown or less inventory is shown, that is stock, or if any false sales are shown, false profit is shown. So all these points are analyzed by forensic accountants to see where the frauds have taken place. Now why they have to do all this? Because they want to analyze where the frauds have happened. The objective of doing this is to see that the accounts are correctly maintained and they are free from all the frauds. Okay, for that they can do in-depth checking of certain selected transaction. Now there can be some transaction which have never happened in the past, but recently such transaction have been bought in the books of accounts. So all such suspicious type of entries will be analyzed under this method to see where actual fraud has taken place. Then if there is any delay in executing certain contracts, why such delay is happening? Is the company doing it purposely, or there is real reason behind it? Okay, so all these things, all the accounting entries, all the statements that are maintained by the company are looked from a point of view of suspicion. You might have seen shows like CID and all. So in that, how they try to find out where the fraud is. Similarly, a forensic accountant under this method tries to find out critical areas where fraud might have happened and then tries to bring it to the notice, wherein a solution to the legal dispute which is there on an organization can be bought a solution for that. Okay, so that is done under critical point auditing. The second method of forensic accounting is the technique that is used is proprietary audit. Basically in this technique what happens is they try to analyze what are the expenditures and the revenues. They try to see from where the money is coming, that is revenues, and how this money is spent, whether the money which is coming is correct or no, correct funds are received or no, and whether this money is properly utilized or no for that purpose. Now for example, if you are showing that for maintenance purpose you are spending 1 lakh every year, but actually is this 1 lakh used for maintenance every year, or less amount is used and remaining amount is misutilized by the employees of the organization? So under proprietary audit, more importance is given to revenue and expenditure. Especially this happens with government accounts, right? You get a lot of funds from the government to utilize for a development purpose, but actually those funds are utilized for that purpose or no? For that, proprietary audit is done, and with this you can understand whether the funds are being utilized for a specific purpose or no. So that is done under proprietary audit. Under critical point auditing, what happens is all the critical ideas, all the transactions are being looked after. Under proprietary audit, what happens is you give more importance to the revenue and expenditure of that particular organization to see where the fraud might have taken place. Okay, so this is all about forensic accounting. Now moving on to the next topic that we are going to study in this module, that is creative accounting. So let us see what is creative accounting. Now, creative accounting is a term which is used as a systematic misrepresentation of the true and fair income, liabilities, and assets of corporations or organizations. So, here creative accounting is what you are misrepresenting. Just look at these terms that are used. It is systematic misrepresentation of true and fair income, liability, assets. So here you are using loopholes in the laws. You are making use of that and showing a better picture of the company. Now this is done by all the organizations. How they do it? They find out loopholes in laws and taxation rules that are applicable to organizations, and they try to show better picture of their accounts. Now there can be several motives for doing this, and to some extent it is also permissible by the law, because there are certain defects in the laws. That is what the accountants makes use of, and they try to show a better picture of business in front of the stakeholders and to the government. We also have a definition, so let us go through the definition. According to Blake, Amit and Dodds, creative accounting is a process whereby accountants use the knowledge of accounting rules to manipulate figures reported in the accounts of a business. So here accountants only are making use of accounting rules, and they are manipulating the figures of business and reporting it in the books of accounts. So they try to make use of rules in their benefit. How the rules of accounting can be beneficial for them, they just look at that and try to apply it in their own business. Okay, now what is the motive behind doing this? We shall study that. Okay, why you need creative accounting, why they have to show a better picture? There are certain reasons for that. So let us see what are those reasons why this creative accounting has come into existence. So first is to meet internal targets. Now see, every company sets its own target for the employees, that you have to have so and so sales, you have to earn so much profit in this time. Okay, so whether actually the company is earning this profit or sales, or that we don't know, or sometimes the targets are too low or they are too high. So to meet such internal targets, certain adjusting entries can be done by the employees of the organization, so that they can show that they are meeting their targets. Okay, so that can be one reason of doing creative accounting, to meet the targets of the organization. Then secondly is to meet external expectations. Now see, when a company or an organization is existing, so the stakeholders which are there of the company, just like the creditors, the suppliers, okay, then the suppliers, government, customers, investors, everyone has got certain expectations from the company, that the company will do well in the market, it will earn good profit. Now when it comes to customers, customer expect that good quality of products will be sold by the company at the reasonable price. Then investors have an expectation that they will get good rate of return on their investment. Then government has expectation that the company will do business legally and pay good amount of tax, right? Then the suppliers have the fear whether the company will be able to pay the credit amount within time, right? So all have set a number of expectations from the company. Okay, all have got different expectations. So in reality, whether the company is able to fulfill all these expectations or no, that we don't know. So to meet the expectation of all these stakeholders also, somewhere this creative accounting is used. Now in a year, if there is too much profit, company does not disclose it, because suddenly the rate of shares might go high and it will affect the market. But in the next year, if there is loss, what the company can do is it can create more reserves. When there is profit, when company is earning good amount of profit, it can create certain reserves and keep this profit aside. So in the coming years, if by chance if the company has earned loss or has earned less profit in that particular year, then this reserves can be utilized for showing proper profit that the company is, or the consistent profit that the company has earned throughout these years. So for this, creative accounting is used by the company. Next is to provide income smoothing. Now, as I was telling you, whenever any shareholder or anyone who is investing in the company, he is always thinking about the income, whether he will get good income or no. You know, share market is such a dynamic market. The value of shares keep on rising or reducing. So it is very dynamic market or volatile market, and lot of risk is involved if you have made investment in just one company. Okay, so to meet the expectation of such shareholders, company has to make use of creative accounting. Just now I gave you example that if in a particular year company is earning too much profit, so entire profit is not disclosed in the books of accounts. Certain reserves might be kept so that when the company is earning loss, this reserves can be utilized for showing good profit in that particular year also. So the actual financial figures that are shown by the company in its statements are not always true. Some adjustments are always done by everyone, and that is also permissible to certain extent by law. If you can exploit the loopholes in the law, you can always show a better picture of your company in front of your stakeholders. So that is nothing but creative accounting. Next is to window dress for an IPO or a loan. Now suppose if the company is going to issue new shares in the market, initial public offer, that is IPO. Now suppose the company is planning of issuing new shares in the market for raising its share capital. Now before it takes this decision, it has to show good performance in the market, that is good amount of sales, good profit. Actually whether the company is earning good amount of profit or no, we don't know, but at least it can show it in its financial accounts. In the financial statements it can show that the company is performing better. Only then the investors will plan of investing in that company. Suppose if the company is in running losses or is not earning good amount of income, no investor will be ready to invest in that company. So to attract the investors also, you might window dress your accounts. That means you might show better picture of your financial statements. Or for that matter, if the company is taking loan from a bank, even bank will go through all the documents, all the financial statements of the previous year to see that the company has got good record of sales and profit, so that company might be in position to repay the loan, whether the company is capable of utilizing the funds in a proper manner, and the money of the bank also is safe. Okay, so for that also creative accounting is used. Next is taxation. The creative accounting may also be result for desire for some tax benefit. Now see, when you are earning good amount of income, naturally you will have to pay good tax to the government. Okay, so sometimes what the companies do, in order to avoid more tax payment to the government, they make investment somewhere else so that they can get tax benefits, or they show less income so that they have to pay lesser tax to the government. So for that also creative accounting is used. You have to use the accounting policies in your favor and show your accounts in that manner as it is beneficial for your organization. Next is if there is change in the management. Suppose there is change in the management, that is the board of directors or the CEO or the managers have changed for a company. So what this new board of directors or management can do is they can show that in the previous years the company was earning losses, and as soon as new management has come, the company has earned good amount of profit. Okay, so to prove their own intelligence or caliber, they can play with the books of accounts of the company, but within the scope. Not entire amount can be changed, or not excessive exploitation of law can be done. Only to certain extent it is permissible. So that also can be a motive for using creative accounting. So these are the reasons why creative accounting is used by the companies. With this I conclude for today. Thank you.